Hey, good morning. This is Julie, J Auto Trading Strategies. It is Saturday, September 24th. The markets are closed, and we're going to take a look back at what happened with the Federal Reserve announcing that it is restricting banks from participating in the future in the commodities markets. What they're going to do is they're going to charge them a 1,250% capital charge if they want to play with commodities, and that effectively will end bank participation in the commodity business. So we're talking about Goldman Sachs, the largest crude trader on the planet, banks, hedge. So we are talking some serious changes, systemic changes, the way banks are going to be restricted from participating in financial markets. So what they'll probably do is just regroup, separate out those divisions, form a new company, a new entity that's not a bank, and continue trading, I would imagine. I don't know how that's going to work. I don't know if they can feed that back to the bank, that division. They're supposed to be separating them out. So I don't know if that, just changes the game. But as far as non-bank hedge funds, last year, Zero Hedge points out that there's a lot of systemic risk between the main hedge fund players, well, not hedge fund, just trading companies, Trafigura, Mercuria, and Glencore. They don't mention Vitol. They're like the largest energy trader there is. So I think Vitol is going to take up the reins myself and be the largest energy trader. They trade storage, they trade tankers, they trade energy, they trade electricity, they trade Louisiana Sweet, Mars, everything. Anything Canadian oil, sands, electricity. I said electricity. So it's going to be Vitol. So these firms, though, have been in the news for their debt, like Glencore, a massive amount of debt on its balance sheet last year. And so I don't know how that's worked out for them, but I do know that this is a huge move by the FOMC. They're getting this in line for their December rate hike. And so as this blog, The Progressive Farmer, points out, they're thinking it's going to be more than a quarter-point increase. They'll probably do a half point. So they don't want that big shock in the market to be exposed. So here was, this is soybeans as it tanked Friday. Let me put it on crude to show you the huge move in crude. It's going to look pretty similar, but the move lasted for like a half an hour and just flushed tremendously. Here it is. Oops. Just in one, we had just nothing but sideways chop, and then we had this huge flush down in like a half an hour from the announcement, and then it went sideways. And this is what it looked like with my trading template that is available for everyone. You don't even need my algorithm to trade these. Keeps you out of the middle and gets you back in when price is moving. If you have a game plan for a directional trade, whether you are arbitraging the spot price to the futures price for a directional bias, whether you're doing a trend filter like I do, weekly, daily, 60-15 on the technicals, however you derive what direction you want to go, this is what this presentation is for this morning. Just managing your exits so that you don't get into big trouble. You want to be able to have a platform that's going to get you directionally in a move and get you out when price is not moving that direction. So if you just do this alone, get out and then get back in, you should be okay. And stay out on the sideways chop. Recognize when it's going sideways chop and just turn it off. And that is what I'm working on with my algo to determine with other conditions that I'm instituting to determine that random walk. So if we have a forward movement, long or short, here it is long, as you know, we want to participate long, so we can take those trades several different ways just to go long or short, and that is what I advocate. Just find a direction. Obviously we want to be trading short in crude, so when it's on short, it's not going to take a short when it's going long at all. It's going to wait for the market to flip, and then it's going to start getting you in. It's not going to let you sit in the parts where it's not got that opportunity to move, and then it'll get you back in short. So this is how to trade. I mean, you want to pick the specific direction and have a plan to get you out when the market is not moving that way. This top reversal will get you in at the top of the market in the direction you want to go. This is good for like the E-mini, or just when you're in that random walk and you say, I want to get short, but I want to use my top reversal to do so, because when you want to sell, you want to sell high and buy low. Or do you want to wait for the trend and sit out of that middle part and try to get a trade in the direction that the trade is moving? It saved my butt to have the when I did my Blackbird presentation, I had a directional strategy going, because I knew that when you have a an event like the FOMC minutes, gold, for instance, is going to move directionally one way or the other. So I put my higher time frame on that directional filter. Let me put it back on gold so we can see this. And when you have a higher time frame like this, higher time frame Eureka bar of 30 ticks, this is how you want to trade it. You want to trade for as long as possible in that direction and get out, have it exit as soon as possible. And I had a different filter for that exit, but you can keep in that trade as long as possible and get out on that retracement, but take advantage of that big move. And that's what you want. You want to take advantage of these huge moves when those news events come out. So learning to trade directionally, learning how to exit a position is so important. I'm shocked at these big trading firms getting into such deep debt, and I don't think the systemic risk would be there if their algorithms were working. I mean, what are all those quants sitting over there doing? Everybody's saying quants, quants, quants. You have to have a PhD in physics. You have to have all of this, R and Python and all these big data, Hadoop, Java developers doing this. No, you don't. You have to know what you're doing. That's all you have to do. And then you get software to help you put your plan into place very, very simply. So just understanding a few concepts, understanding directional trading, and you're good to go. So I appreciate all the support I got this week. I had a disaster demonstration. I will come back and do one on the FOMC, or the, excuse me, I don't want to do the next FOMC. I want to do the next non-farm payroll Blackbird presentation that comes out October, and I'll just run that on my website and allow anyone that wants to come in to watch it live. And we'll take these directional trades during non-farm payroll, and I'll show you how you can profit tremendously by just going in the direction of a trade, and as soon as that flips over, you get out. So you've captured all your profits and you get out and then you get back in. So works out very well when the market is moving on those big events. Take your time, download some data in NinjaTrader, go back, and in your instrument manager you can add a new list, name it continuous. I've already got one, so I can't add two, but add that continuous list. Come over here in your contract, change it to the pound, add that to your list, and that way you've got continuous data on your screen. All you have to do now is go into your historical data manager and download data for that continuous contract, you know, going back as far as you want, and that way you can back test these future contracts without having that rollover and the different prices. As you know, the prices change from 1 month to the next. You'll be in October crude and it rolls to November and the prices are totally different. So how to accurately back test in any commodity is to run these continuous contracts on those back test results. Otherwise you're just wasting your time back testing. So back test your strategy, sim trade your strategy, get an exit plan. I have, again, several ways to exit the market. I go to the opposite direction. If I want to stay long or short, I can just stay long or stay short until the opposite condition. I can just set it on reversals, which does not work in a market that has a small bar. But if you open that bar size up, you can get some really sweet trades, especially if the market is moving sideways. High-low 6 demonstrates this principle, where you can stay in a trade much longer in a direction and then get out on a bar change and then get back in on your other bar change, or just trade the high-low 6. And again, those top-bottom reversals. If you know that you're wanting to go short, put it on a top reversal in an overbought, oversold level and take it all the way back in to the other side of the market until, you know, you're satisfied with that trade, or until you get your exit through another filter that you use that of a possible trend change. So exits are the key to successful trading. Having a trade plan, knowing which direction you want to trade, and sticking to that plan. Don't switch too much. You've only got two methods to trade. You've got trend trading or mean reversion, and that's it. We are not going to be successful doing anything else on a long-term basis. Yes, we can scalp once in a while at a key level, but for sustained trading philosophy, it's only one of the two: trend trading, momentum, or mean reversion. And so good luck. Come back again on non-farm payroll, and I will have several markets ready to go in Blackbird, and we'll see how that does on non-farm payroll. And I'll try to get that spike, that out of the gate spike, and see if I can get Blackbird to get me out of the trade on that snapback. Okay, y'all be good. Have a good weekend, and I don't know what I'm going to be working on my plan for next week on these commodity reports, because there's no telling what's going to happen now with we have a significant game change in commodities, a significant game change, especially in the energy sector. So I thought the Fed wanted to get interest rates up, and this is certainly not the direction to do so. I hate to send them the memo, but they're going in the wrong way. They need to turn this around, so I don't know how they're going to do that. That's not going to be pulling a magic bunny out of a hat. Okay. See y'all guys later.